A very good afternoon, everybody. Welcome again to a special edition of Friday Drinks. You know, almost every week it's a special edition. I think the reason why I say that is because it's always exciting to get, on a Friday with you guys and, talk about special things that are happening in our lives.
Or you just want to devalue the meaning of the word special.
Well, there's that too. But you know what they say about what's been happening with grade inflation and everything. Everybody now gets an A star because that's just how special or just how
do you believe in participation prizes?
Well, no. I think an A star should be an A star, but I think that during our days, it used to be one or two individuals will get an A star, but now, you get more people getting A star because it shouldn't be something that is difficult to get. I think if you remember when we were in school, it was something that was very, very, very difficult to get. But I think that it should be something that if you've done the work, you should be able to get it. So I think it's a special edition because we haven't done this in 3-4 weeks. Well, it feels like
we haven't
eternity.
Been in the studio for a while.
Yeah. It feels like eternity.
It's good to be back.
I'm happy that we're back, and we're having more of the tea. And sir, maybe you can tell us about what you're actually having there.
Yeah, well, we've discussed tariffs for a whole bunch, and I've got a World Whiskey by the House of Suntory, and it's a blend of Irish, Scotch, American, Canadian, and Japanese whiskey, and it promises to be, it claims to be rich with flavor, to have all my favorite flavors, sweet, spicy, and smoked. So I'm quite excited. You guys are having this tea that you had?
Yeah, turmeric. I'm going to have the turmeric infusion.
I'm going to have the ginger herbal infusion. The good thing about this tea is, there's quite a variety of, pieces to choose from. So it may be the same box, but there are like 6 different varieties. So look, we feel quite rich.
Yes, it is a pretty cool box.
Yeah,
and it's got nice,
quite
colorful
privileged to have this.
Teas.
Yeah, and it's good. It's good to be back in the studio after a couple of weeks away, but we still enjoy these shows that we do outside of
away from home.
Away from home, yeah.
What's your take on Gift and Percy? They had a go at it at the conference.
It was a good show, so I thoroughly enjoyed both the session that was in the conference itself, the panel discussion where you were moderating, but also the show that we then had on the sidelines. What I really liked about that show is the diversity in views. I know sometimes people tend to be very,
I think Ranka is being extremely politically correct by describing it as a diversity of views.
Of course, what's the point of having a show where everyone there, every panelist is agreeing to whatever the moderator, the issues that they are bringing to the table. So it's good to have a diversity. It also captures what we have, that we have got different views. So even those views that are not popular, they still have to be.
Yeah, but there was also diversity in coherence.
You see, I think it speaks.
Well, which was deeper.
You are being biased now.
I'm not. I don't know, Tinashe.
And I saw that bias.
You were moderating. I think you were actually very generous and magnanimous to one of the panel, one of your guests. How did you manage that? I must say, I give you a lot of credit for that because I didn't think that you had the capacity to be so. See, balance is not the word that I'm looking for, but you were very magnanimous. That's very clear.
Yeah. I think it was a long day, and I was tired, and everybody was tired. So but I think it's also very important. I say that Percy is very important, and kudos to him for having the courage to actually come on our show. But I think that he's very important because he makes us understand how policy making is actually happening. I think people forget this, that there's a bit of what we do which is purely analytical and as analysts, but there's also a bit of us just trying to understand how the policy,
how the sausage is made,
is actually going about his business. I mean, it's the same thing that, and I wanted you to get on this on tariffs and Trump, that there's analyzing what Trump has done, and then there's also just understanding the motivation and where he's actually coming from and what's likely to happen based on the man. rather than on the analytics around tariffs. Maybe you can just give us an update. What's actually happening there? And where do you think things are going?
Well, there hasn't been much progress, I think, between the Americans and the Chinese, at least. Between the Americans and everybody else, Trump's pressed pause. There's a universal 10% tariff all around, which is not, dramatic or awful. And there's a lot of negotiations happening behind the scenes. But I think, one of the challenges with politics is sometimes it stops being about policy and it starts being about perception and personalities, who's backing down, who's not backing down. And I think that at that level, really, the only imperative is, what's in the best interests of the economy, notwithstanding how it might be spun in the media as backing down or making a concession. So I think there's going to be an unnecessary amount of pain in both the U.S. and Chinese economy and the global economy as well, because those are like the two largest economies in the world. But I remain, I think the silver lining in all of this is that, notwithstanding the pain that we're going to endure over the next couple of months, I think
months or years. I mean, Secretary Bassett, he came out and he said, what, this tug of war could go on for the next 2-3 years.
I don't think it will go on for the next 2-3 years at this level of intensity. I think the repercussions are going to last for years, because obviously, if you're running a major corporation anywhere in the world and you've booked some huge losses on account of this tariff war, whenever you allocate capital or make decisions about which markets you're going to operate in, you're going to have in the back of your mind that the possibility of a tariff war happening in the future, and you're going to apply your mind to how you would how your business would be affected by that. So that calculus probably wasn't there for the last 20-30 years. I think, in the early 80s, the McKinseys and Co. were recommending to everybody who would listen to outsource to China the manufacturing. And that decision didn't have any imaginable downside risk. It was just lower costs, scale. It just made sense, right? Mm-hmm. And it proved to be a winning bet, to be fair, for the last 30, 40 years. And only now is that being called into question, because there's this tariff war that's severely disrupting that model, right? That's calling into question outsourcing to a market that can manufacture at scale cheaper. So I think there's going to be some thoughtful trepidation around outsourcing going forward, around having a supply chain that's vulnerable to a trade war, in a way that wasn't true, for the last 3-4 decades. So I think the world has definitely changed. And I don't necessarily see that as an awful thing, or as I think there's going to be some severe short-term pain, but I think in the long term, I think it's Ray Dalio who actually coined, he had this interesting expression that he wrote this article where he said it's a beautiful reset. I don't know whether you guys saw that.
Yeah. He has been writing about this. I mean, his entire book has been on debt levels, and just how unsustainable debt levels are around the world, especially with America. And he attributed part of the debt crisis as being a trade deficit crisis as well, and that at some point had to be dealt with. So he thinks it's important to actually engage China and America, and that if they resolve this, then the world has a better shot at growth. And if they don't resolve it, then we have a much bigger crisis ahead of us, both in America and in China, and I suppose around the world. Sticking with that, Ranga, we've seen gold prices, go above 3,300.
No, 3,500.
Oh, it's now 3,500 an ounce.
Already analysts are talking of 4,000.
My best estimate, I'll tell you, when we were doing our analysis, was 2,900, and that was like 6 months ago. Mm-hmm. So, they've beat all expectations and all the analysis. But coming back home, given where the gold prices are, what the Zimbabwean Independent's leading story, and kudos to the journalist there. That's Freeman Makopa. Well done for this article in the Zimbabwean Independent that talks about how $200 million was wiped off Zim mining industry, and this had to do with power cuts, slumping prices. I think this is for platinum, and they ravage our first quarter earnings. Zim miners produced higher volumes, but funneled fewer exports into the international markets during the Q1 market by softening mineral prices and logistical gridlocks on the global scale. The industry data showed export receipts dipping by 27%. That's huge. That's a loss of 200 million in the first quarter. What are we getting wrong? Power cuts, all this, at this particular point in time, do we need this?
We are missing out on this, the commodity boom, especially around gold, where most of these mining houses, they are probably structured with a long-term, maybe gold price of below 2,000, probably, and for them to be in a situation where the price is actually 3,500 an ounce, that should really come as a big windfall. But it's not surprising that the mining houses are not really experiencing or feeling that windfall because of the negative policy environment that we have. But it's a big miss, not just for the mining houses, but for the nation, as it were. It was probably 2-3 weeks ago on this show where we were saying, at these current prices, I think we should mine as much gold as possible, right? Even some ore grades that looked uneconomic at a price of 2,000 per ounce, surely at 3,500, it makes sense to do that, whether it's open cast or it's like deep mining, whatever the case may be. This is probably our time for us to get as much of that out of the ground and then invest into
increased capacity,
also technology. Because you see what happens with mining is, so you've got this good run, but that price, it just takes something, maybe some other statement.
It's self-correct.
So the price can actually...
It's cyclical. These prices are cyclical. They will self-correct.
Yeah, so a good mining model is one where when the prices are good, you are mining as much as possible, and then you create capacity for the time when the prices do take a knock. You do that by investing in technology, but also just investing in whatever, more exploration, but also the way you sort of prepare the way you are doing your mining activity. We are not seeing that, and the power issue is actually a big one. It's really sad that we are sitting here and we're still discussing how power issues are really affecting businesses, and it's sad.
There's a story doing the rounds on X and social media and everywhere, and I'll read just a bit, and it was talking about Kenya, but this could very well be true of Zimbabwe and the rest of Africa, and because you highlighted the issue of electricity, it talks about it. So it says, Kenya's real problem is not lack of money or talent. It's the absence of long-term vision and dominance of short-term gain. Leaders talk big, but systems don't move. They wait for outsiders to bring business rather than build an environment for it. The biggest indicator, electricity. Vietnam, 100 million people, over 70 gigawatt of power. Kenya, 50 million people, only 4 gigawatt of power. This is not a side issue. It's the foundation of economic development. No investor will build a factory where the lights flicker every day. Vietnam knew this. It built power generation before free trade zones, and now it's a global export hub. In Kenya, basic energy supply is unstable, and yet the government built a fancy expressway from Nairobi to Mombasa with an export industry to support it. Tourism is another missed opportunity. So anyway, we'll get into that. But this idea of Africa being so fixated with these expressways and roads and free carriageways and spaghetti roads and everything, and then not building on infrastructure. We've seen that again in Zimbabwe. What's your take on this post that, Africa, well, you're talking about Kenya, but, it does not lack money or talent. It's just execution. We're very bad at execution.
No, I don't. I actually don't think that's the correct conclusion, that we're bad at execution. What that article tells us about Kenya, and that's true in Zimbabwe and in many other parts of Africa, is that the government is bad at capital allocation, right? So basically, if you think about it in a Zimbabwean context, right, why do we have a power crisis? Firstly, the government has a monopoly on power, right? They have a monopoly on generation, they have a monopoly on distribution, and they set the price. Okay, so if you had, if you went to New York or London or Shanghai and found somebody who was willing to invest $500 million or $1 billion in power infrastructure in Zimbabwe, but they wanted to sell the power at 20 cents a kilowatt hour, the government would say, no, that's actually outside of the
statutory
right? So
and we're being generous at 20. Suppose somebody actually wanted to sell it at 50 cents a kilowatt hour.
Yeah. So you have the state setting all the rules. They're the referee, right? And then they're also the biggest player on the field, right? They have the biggest investments in that space, and they're allocating capital. So what happened in Kenya is somebody decided that it was more important to build this, to connect Mombasa and Nairobi than to invest in energy infrastructure. But even if they decided to invest in energy infrastructure instead, they probably would have made a hash of it, because it's government. It's not, the private sector is much better at solving these kind of problems. And so
are you saying in Vietnam it's private sector that's I'm not quite familiar with Vietnam.
So Vietnam is one of those paradoxes like China, where it's run by a communist party, but for the most part, the private sector are huge players. But from an African perspective and a Zimbabwean perspective, I think that we would make so much progress if the government just stepped out of the way, it deregulated, and it let the market solve these problems. As long as the state decides that, just this week they announced another government agency to do with investing in industrialization, right? And so it speaks to the philosophy behind the leadership in our government, that they believe that it's incumbent on them to solve all these problems and not the market. So they've set up. So
your argument is capital allocation. Ranga, reading this story, do you agree with it, that the problem is actually execution, or do you agree with Rufaro that it's not execution, it's just capital allocation?
So this is so the story you read is attributed to Wan Doan Chao, is the boss of Vietnam Gas. He was just making comments about the comparison between Kenya and Vietnam, which comparison actually would sort of fit in any African country. And I think he was on the money in terms of the issues that he identified as being problematic in Africa, that we lack long-term vision. We are always looking for short-term gains, and the gains are not really for the nation, like at a personal level. So whoever is sitting around on that round table discussing investments, they are always looking at what's the need for me. And it's like that short-term, selfish kind of focus that has really taken us back to a point that I would not be surprised if in fact, there must have been so many good proposals that were thrown out simply because someone didn't see a way to how they're going to get paid. So it's never about whether this thing is beneficial for the nation, but it's always about what's in it for me. So when chances are that expressway, the reason why it was prioritized is because someone was assured of how they're going to get paid.
Couldn't that same person be assured if it was building electricity?
It's possible. So I think where you're getting to is, look, fine, we are not condoning corrupt activities, but maybe to the extent that these bureaucrats that are naturally corrupt, if they could do it in a way that would still create efficiency on the other side, you could sort of say maybe not okay, but it's better, way better than what you're seeing where you are giving priority to things that are not necessary. So I think the big takeaway is we really need to move out of this short-term mentality or seeking personal gains at the expense of the long-term benefit of the country. And I think just to know that maybe if you are creating a good base as a government, it means in future you should be able to collect more revenue. You're going to get more people employed, and most of these problems that you may have that will really make people focus on the politics rather than on the economics will go away. So I think getting key infrastructure done, that must be a priority for any government. But it's also about the way you do it, because otherwise you then get some pushback to say, we were doing the roads, but the way we were doing that was not good. Okay. Again, there was a lot of short-term.
If I could push back before we move on, because I think this, so my favorite example, and I highly recommend the show on Netflix, The Men Who Built America, right? And it's basically about, they're called the robber barons.
Some of us are not on Netflix.
Okay, well, there's this fantastic show about the robber barons, and it's like, so the robber barons are this set of entrepreneurs at the turn of the.
And it's a misnomer to actually call them robber barons.
Yes, that's the expression that captured the public's imagine. That's what the Hollywood moniker for them, right? Your John D. Rockefeller, Andrew Carnegie, Vanderbilt, J.P. Morgan. These ultra successful entrepreneurs who built the railways, they built the oil infrastructure, they built the steel industry in the US, they built the banking sector, and they became obscenely wealthy in their own right. And it's this, personal wealth that got, the Hollywood crowd or the journalists or whoever coined the expression robber barons, because, at some level, people couldn't believe that you could create such wealth through entrepreneurship without some nefarious, without doing something, beyond the pale. But these guys were genuinely entrepreneurial, and they built these massive businesses from nothing. And the country benefited immensely because as they were building these businesses, they built the railroads, they built the steel infrastructure, they built the oil infrastructure, they built Henry Ford, invented the production line that made cars affordable, right? So this idea that personal achievement, right, that creates this huge inequality is necessarily bad. I want to push back on that argument. I think if the state,
I don't think that's Rangar's argument is it's not necessarily misallocation of capital. Misallocation of capital is happening because there is corruption in the decision making. So it's not like they looked at the merits of an expressway and electricity. It was purely because somebody was benefiting from an expressway from Mombasa to Nairobi.
I remember, I'm sure you guys remember, there was a time when I think Dangote was looking to, invest into Zimbabwe in the cement industry.
Yeah.
And, we hear that someone was asking for some money upfront. And it's probably the reason for him maybe shifting his focus. And this is not the first time. Even Thabo Mbeki, there was a time he actually alluded to that
the Ghanaian investor,
the investors and whatever. And I think it was, there was some interview that we did where some of the political actors were accusing each other of stifling deals because of the kickback issue, without naming names. So we are that. I think the level of corruption is so crude that we are not
what's leading to the misallocation of capital.
Yes, and that's the same thing that even Strive Masia was mentioning in Kigali. When
investors will just quietly walk away.
That investors, if you don't build a good environment for investors to make money, they will simply walk away. Just this week, I saw an old newspaper cutting where I think VW before they eventually settled for South Africa, they were looking to put a plant in Zimbabwe, and then they, found Zim so unpalatable that they thought, let's ship it to South Africa. So it's all to do with things that we can control. I think what we just need to do is to build an environment.
So in light of that, because I think that you both make very strong points, which is misallocation of capital and then corruption in the decision making. Let's look at Kuvimba. We've got this 1.9 billion where government literally pays the 35% private shareholder in Kuvimba. They paid 1.9. We won't get into
TBs.
In TBs.
Because I think there was a statement from Kuimba setting the record straight that we didn't pay any cash. This was in TBs that are maturing in 10 years.
TBs is considered money. In fact, it's considered near money. So the point...
Zim TBs are not considered near money. That's why they're discounted heavily.
Yeah, but then it means
anything that is considered near money, you can't discount it by more than 50%.
If you put 1.9 billion US dollars in a monetary system, what do you think is going to happen to our monetary system? Even if you discount it by 90%, what do you think is going to happen to our monetary system? So it is money.
That's a rabbit hole. Carry on.
It is money. Whether it's being paid over 10 years or whatever, it is money. But the real issue that I want us to get to in terms of misallocation of capital as well as corrupt practices in making decision making. Not that we're making any allocation whatsoever, but we just want to bring to the fore that what could 1.9 billion, what's the opportunity cost for 1.9 billion? What else could we have done with that money? For example, we could have expanded Hwange on our own. We then didn't need Chinese financing for Hwange. We didn't need investors for Batoka. We don't need investors for Zesa in Kariba. We could have expanded that on our own. And then, but to start off with, and that's the question to you, but Ranga, because you're a capital market player, make us understand why it was necessary for government to increase their shareholding from 65% to 100%. Like, what's the logic? Because if you own 65%, you can practically do whatever you want as far as business and strategy is concerned with the company. Was there a need to own 100% of Kuimba?
No, in fact, they should have actually reduced it to 51. 51, you've got control. And then you get the 49% investor maybe to bring in the actual liquidity which you need to get the operations going. There is not much liquidity to expand operations within that Kuimba mining house outfit. So to answer you directly,
so what's the motivation of moving from 65 to 100% when 51% could have achieved every strategic aim that they needed? what's motivating? Could you maybe we need Percy to actually help us understand how that decision was made. How do you move from 65 to 100% when 51% could have achieved what you wanted?
I don't know. I think we are just left to speculation. Yeah, but I don't. Clearly, on paper, it doesn't look like it was a deal that was really worth making. Like I've already said, with 51%, you are already controlling. And look, mining is capital intensive. Government does not have the capital. So so typically, because the government is already stretched financially, you would expect government to actually be selling off, privatizing quite a number of its,
or selling. Yeah. If it really was worth this much,
exactly,
were they not better off actually selling more?
Getting the 1.9 billion from someone.
From someone else.
Yes, I think that could have gone a long way in improving the cash flows.
Rufaro, could you ask the first question? Maybe we're just purely speculating, but I think it's important that we sort of understand how government is making that decision to move from 65% to 100% when 51% could have achieved any strategic aim that they wanted to achieve. So that's the first question. And then the second question has to do with, is this the best use of 1.9 billion TBs?
Well, okay, so my best guess on the purchase, I think it's in the public domain in terms of the fact that the 35% shareholder was subject to US sanctions. So transacting in Kuvimba with the shareholding before it became a 100% subsidiary of Mutapa would have presented some challenges, especially if you're trying to raise capital and do transactions on the global market. So that is my best guess as to the motivation. I think were that not the case, Ranga's argument would hold water and would make sense. But I think that's my best guess as to the motivation for increasing government's holding to 100%, because the minority shareholder had various challenges that encumbered their capacity to transact on global capital markets. Now, from a capital allocation perspective, would I be if I was in Treasury and I was sitting on $1.9 billion, would I have allocated it that way? No. I mean, firstly, do I think that government should be in the business of running private for-profit businesses? No. I don't think so. Even the countries that have actually done quite well with their sovereign wealth funds, like if you look at Norway's, the Norwegian sovereign wealth fund and the Saudi Arabian one, they would have been much better off just buying the S&P 500, or issuing a dividend to their citizens. I'm not a believer in this idea of sovereign wealth funds. I don't think that citizens should be outsourcing their savings to the government. I think that you, as Tinashe, are much better off thinking about your long-term future and saving than a bureaucrat in a government.
That's, again, another interesting thing that you bring out there on savings. And Ranga, I want you to come out, in 1995, did you know that POSB was the second largest deposit firm in the country, just behind Standard Chartered? And I think that it is the largest number of depositors, but in terms of value, it was second to Standard Chartered, and the third one was Barclays. So we all know that Standard Chartered and Barclays then left, but POSB was reduced to smithereens. That savings culture that has just actually destroyed our savings base. Would you like to just speak to that this is how we're misallocating capital, and then we have hyperinflation, and then these TBs, if they find their way into the monetary system, we all know what that's going to do, especially to our very fragile nostro balances as it is right now. Those $1.9 billion TBs haven't yet featured in our financial services system, but the minute they are, we know that they will have a big impact. Would you like to just speak to that?
Yeah, but before I do that, I was just looking at the implied valuations from that trade. 35% of Kuvimba, and someone is paying 1.9 billion, it means they are valuing the business as 5.4 billion. So obviously,
That's more than both the ZSC and VFX.
And VFX.
Everything.
Combined. Yeah, and for them to be able to command that kind of valuations, I was just checking here in terms of the operating profit margins, that for 2023 the reported operating profit margins for companies like Rio Tinto was at 29, and the BHP group was about 43%. So for Kuvimba to command a valuation of 5.4 billion, you are looking at operating profit margins of almost like a third of 5.4. So,
About 2 point something.
2 point something to almost 3 billion operating profit margins. So just look at the books. I doubt even 100 million they can make 100 or 50 million. So it just tells you that.
I mean, when you compare it to Zimplats,
yes,
that tells us that there's
so
a problem
first,
there.
And Zimplats, valuation typically is about $1 billion.
Yeah. So it's a highly
and they're making about 200 million in profit.
It's a highly inflated figure that then put into question how they sort of arrive to that, unless they're saying the 1.9 was really not 1.9.
Well, they did say that. They said they're working on a discount of 40%. Okay. But even if you use 40%, it's still
40%. That takes
about $1 billion, 1.1.
Yeah. So obviously that's a problem. Then to answer your question, of course, it will obviously create problems, liquidity problems in the market. When that 1.9 billion, whether it's in TBs or, in fact, especially if it is in TBs, because if the holder starts discounting them, it just mops up whatever little liquidity is there, and then just puts the entire market into chaos. And you want to ask yourself that in terms of the priorities of government, was it really that such a priority? Why was it paid ahead of maybe important things like maybe the farmers?
Yeah, but it wasn't paid, you see.
No. Even the 1.9 billion.
Give those TBs to the farmers.
To the farmers. Because the 3.5 billion is likely to unlock more in terms of all the problems that we are facing as a country, and the fact that we are failing to, unlock monies, funding from the international capital markets. Why would you prioritize making this payment, which was, I think we have already established, it was needless because government already had 65%. So again, so it really puts into question the motivation, but it's very clear that it was not a priority. I mean, it should not have been a priority.
Let's go into other news. 10 to 15% maize production deficit. This is from the World Food Programme. Zimbabwe's maize production is expected to fall short of the national requirements by 10 to 15%. Because of it was a longer delayed rains. They only came in later on. But it looks like when we read the government reports, I think we were supposed to increase production by something like close to 35% from the previous year. I think the budget was looking at maize production being very positive, and we're being told that we're going to still have a deficit. It means that we will have to import. What do you think the impact is going to be again on our economy and where we are as an economy?
So compared to last year, obviously, that will be quite a significant improvement. So 10 to 15% of deficit, you are looking at what, 200,000 to almost 300,000 metric tons, since our requirement is about 2 million metric tons. And that should translate to, on the usual price of around 300, although, it's supposed to be 200 or low, or below, or lower than that per ton. So it still means that we need the foreign currency is still required, maybe to the tune of nearly maybe 500 million thereabouts, or even slightly lower. But it's much better than last year. But the way I look at it is always it's good to talk about the output. I think it will be also better to then say how much do we put into this season for us to achieve this much. Because,
that speaks to our yields, and our yields are extremely low.
Yes, so the yields, but for me it's not.
Yes. What is your yield, Ranga?
You relies on rainfall.
But let me make my point very clear. Mm-hmm. So I'm saying the cost of achieving this, say, 1.8 metric tons output, how much is it? I think we need, because you'd actually find that
it's very high. If your yields are very low,
because remember we were
very costly.
We were probably budgeting for 3 million metric tons, and the inputs that were sort of deployed were for 3 million metric tons. So if you are a business, that is actually a loss, because it means you are only able to produce less than 2/3 of what you intended.
Well, at world prices, we do make losses, but GMB, it's known to be extremely generous to the farmers. We've seen that with wheat, and we see it with maize, where you get, close to 30% boost in price, world price, purely because.
And then to answer Faro directly, my hustle is 100% funded. So if I make a loss, actually I suffer as Ranga. It doesn't really create any dent on the fiscus. So if this was,
it becomes a capital allocation problem.
Yes, at a personal level, my
I always ask him, why are you allocating capital to this operation?
Gentlemen,
I want to feed the name.
Gentlemen, CZI survey came out. I actually attended the plenary session there, which is untapped capacity. We are operating at 50%. Capacity, and it's been slightly coming off over the last 4 or 5 years. This is in the manufacturing sector, so it's around 52%. But what does this mean when national capacity, is around 50%? Half the capacity is lying idle.
So Tinashe, your question vexes me. Whether it's at a global level with this tariff war, where someone is claiming, it's a problem that all the manufacturing is offshore, or at a Zimbabwean level, where we're saying we're operating at 50% capacity or 40% or 30%, I'm vexed by why anybody cares about this. At a national level, in my mind, what we should care about is exploiting our natural competitive advantages. We have a competitive advantage in our natural resource endowment, in minerals, in arable land. We do not have a natural competitive advantage in manufacturing, right? China is the world's factory. South Africa is much more industrialized than us. Why do we, in this part of the world, think that we should be operating at 100% manufacturing capacity when a lot of the plants were built in the 1960s? Many of them still use equipment that was purchased in the 1960s. The supply chain is from the 1960s. We're not well capitalized. We don't have scale. We don't have the best skills in the world in terms of cutting edge manufacturing. Why do we expect to be manufacturing at a much higher level than we are today? Are we not better off focusing on our natural competitive advantages and importing everything that we can't manufacture?
To answer you directly, the old machinery would have been decommissioned by now. If you've been consistently operating at 50% capacity, it means you've got excess capacity, so overall you will then decommission. But I think that a lot of the excess capacity is because people actually were expecting growth. Mm-hmm. That's why they were building excess capacity, or that's why they had that capacity, because in the last few years, perhaps they were operating at maximum capacity. Mm-hmm. But what has happened is their bet on growth didn't come through.
Fair enough.
Right, because you were betting on an economy growing, so you spend money on increasing the capacity, and then that growth doesn't come through. So now you're operating at half capacity. The second thing could be, again, from a policy perspective, that you were not anticipating that government would make such horrendous policies that would favor informal sector and not formal sector. And
the informal sector doesn't manufacture. So to the extent that the informal sector is favored, it's imports, which are more competitive.
It's imports. But then I think that you find that for the last 2 years, there's been a general policy assault on manufacturers beyond just the currency problems. And I think now it's filtering in, because I think that what people are probably do, the manufacturers will then get into your mode of thinking that, okay, we betted on growth that didn't come through, and then we betted on government policy continuing the way it was over the last 10 years. Well, it changed. So I think that now you see a lot of them actually decommissioning a lot of their plants.
Also even cost of doing business. Because now you just imagine running a big manufacturing operation on generator. It doesn't make sense.
That's true.
Yeah.
No, but I want to push back a little bit and make the point that some of the biggest importers and beneficiaries of the flawed auction system were manufacturers, right? They imported equipment at half fair value because the auction was at half fair value, and they imported all the raw materials at half fair value. And the only reason why their model made sense was because they were getting this subsidy through the auction. And it wasn't sustainable, it blew up, and now they have to face this reality. I have very little sympathy for them.
Yeah, but I think if
it's not your sympathies that they're after.
But if I would also push back on that one, is in as much as maybe that was an advantage, a benefit on their part, don't forget that they didn't have a say really in terms of the price that they were charging the consumer. So so them. The benefit that they were deriving from the auction was actually offset almost even at a much bigger extent by the price controls.
Arguing that it was actually the consumer who was benefiting. It's
the
not
price controls.
The manufacturing margins.
So they were not enjoying huge margins.
They didn't make noise about it. They were quite happy to take this money at half the price.
Zimbabwe don't make noise about anything.
Okay, guys, the next one is... government liberalizes the Forex market, the repeal of a law that penalized pricing of goods and services above the official exchange rate. What is your take on that? The repeal of SI 81A of 2024.
Yeah, I mean, geez. Look, I think it's a good step. So I'll take the win. And I would want to encourage the Reserve Bank to double down again and again and again on such steps, because it's a positive development. But it speaks to the nature of our policy framework or environment that you have to make such a step. If the Reserve Bank believed that the exchange rate regime was open, it was willing buyer, willing seller, why was it necessary to actually have that cap in the first instance? It was a policy mistake that they've reversed. I wouldn't celebrate it too loudly. But I'll take the win.
You take the win. Okay, Ranga, because I know we're running out of time. Non-funded income dominates the banking sector. The banking sector is increasingly reliant on non-funded income, such as currency revaluation and transaction fees. I think currency revaluation is something like 56% of their income levels. What's your take on that, on just revaluation? And this is, speaks to the currency problem that we've continuously talked about.
Well, the economic environment is such that it makes it very unattractive for banks to lend. So ordinarily, the business of banking is to pick up deposits and lend out a part of that for interest income. But if you are in an environment where there are policy shifts, for example, the June 2022 one, where interest rates were hiked to 200% from around 50%, and then the chaos that generated, it makes it very difficult for banks really to commit to lending. But also the short-term nature of the deposits is also another factor for banks really reducing their lending. And as more and more, as the economy becomes more dollarized, it also means the demand, the currency which the borrowers are looking for is the US dollars, and the banks are also cautious about lending US dollars because they don't have the liquidity. So what do you do?
Liquidity is not there anymore.
What do you do to survive? You look to other avenues, and it's not surprising
transaction fees. Okay.
Transaction fees.
All right. Afreximbank predicts a steady growth for Zimbabwe, so they're looking at a growth rate of 3.8%, which is lower than the Ministry of Finance is actually looking at. I think Ministry of Finance had their budget growth rate of around 6%. What's your take? I think we're seeing these revisions coming off. Do you think that the Zimbabwean economy is growing, or is it steady, or it's actually in decline?
My best guess would be that we're steady or in decline. I think these multilateral institutions, when they build their models, they are overweight data that they get from the government. And so they've got this bias, whether it's, and I'm not just referring to Afreximbank in this instance, it's IMF, it's World Bank. So, we've seen this over the last 10, 15 years. The Ministry of Finance will create a model with a forecast for GDP growth, and all of these institutions will kind of piggyback on that. They might make some adjustments here and there. And then a year later or 2 years later, they'll make significant revisions when it doesn't pan out. So,
yeah, because there are no penalties for missing, for getting.
So to be fair, like Ranga and I haven't taken these forecasts seriously for the longest time.
There are no penalties for getting it wrong, and remember, for government, imagine you were part of the planning department or committee. The reason for really projecting these lofty growth numbers that you would know that you won't be able to achieve is that they justify the expense side, right? So, yes, we are expecting growth of 6%, so please approve our expenditure that tallies with that growth rate. And like everything, what usually happens, like almost every time, is the expenses actually, the variance on the expenses is such that they are always they're spending more than what they've budgeted for, but on the revenue side, the numbers are much lower. And you have never had in any budget statement where they're saying, okay, maybe you need to sort of revise the way we do our projections. So there are no penalties for making wrong or even excessive projections, and it makes a lot of sense for them. So like what Shumba is saying here, I really don't take those numbers seriously, whether they are coming from the World Bank,
IMF, Afreximbank, whoever these,
because their base is always the number that they're getting from Treasury. They really do very little in terms of putting in their own voice there. But if you had asked me that, do you see 3.8% growth being achieved, like in which country? Definitely not here. The economy is not growing. If anything, it's actually shrinking. All the macroeconomic pointers are showing an economy that is actually
stressed, very stressed.
Yeah.
Sadly.
So it's consistent. And it's really so. So what really vexes me is not really those those numbers. It's how serious people actually plan on the basis of those numbers, like in the corporate sector, private sector. That
No,
really,
but that doesn't happen. It's kind of like, you know. So
it does.
it does.
Because
It
when you
does.
look at the retail sector,
Yes,
the manufacturing
it
sector,
does.
Remember, they were betting on growth.
Yes,
Any
it does.
construction,
even the
that you
tone of
see-
their statements. Like if you look
Exactly.
at
They were betting on growth.
the financial
Otherwise,
statements.
Why would you increase your,
they do.
your retail network?
They do.
If you're not betting on growth.
Oh,
So I always caution my colleagues, analysts, and say, guys, okay, we are here in Zimbabwe, so we should learn to separate our wishes from the reality. So when you are doing a job as an analyst, I think you have to, put your emotions aside. There are things that I wish for because I'm here. So I'm wishing for Zim to be growing at 15% per annum. But the data is showing me something different. So I know it's painful for me to process this thing where I'm saying, no, we're going to be in a serious economic decline, because already it puts me into depression potentially. And I like the
But
feeling.
you're a cheerful, chirpy chap.
I like the feeling of a positive number, growth of 6%, but the data is not showing.
I think Ranga has actually got a very good point, because if you look at the last 5 years, a lot of the companies were betting on growth.
So I think those bets and that perspective on those bets is based on a principal agency problem.
Even-
So let me give you an example that's in the public domain that we can discuss without speculating.
a lot of the
So it's a big business. It's listed. Okay, they recently had a huge change in management, right? Because they bet on growth. They made all these.
But it wasn't just okay. It was a lot of people.
No, but let's just use this one as an example that I think is true for a lot of businesses in Zimbabwe, where you have an agency principal problem, where the management team doesn't actually own the business, and they make all these decisions based on these assumptions of growth, not because they necessarily believe them, but because it's good for them. It's good to be at the helm of.
Your example is problematic, because it turns out that they actually paid a dividend because it was a shareholder who actually wanted a dividend.
Yes, there's that as well, but they were expanding the business while they paid the right.
That was the compromise they made, right?
Right.
Because the shareholder was insisting on a dividend. They were on their own frolic, growth frolic, and they ended up.
I think
they ended up worse
I don't think there's a lot of businesses in the formal sector that actually think that the economy is growing and want to double down on it.
I think most businesses, anyone who expanded, anyone who was constructing all these big warehouses that you see across, they were betting on growth. I think the point that Ranga is actually making, we think is a very good point, and we need to highlight it a little bit more, is that Zimstats and Ministry of Finance don't realize the fiduciary duty that they have to give numbers that are extremely reflective of the underlying economy. That if they were to come out and they were to tell the market that actually next year is going to be a difficult year and growth will be at 1%, then business will adjust and they will work with that 1%. Now, continuously over the last 5 years, we've been told that on average we're growing at 6-7%. When the reality is we're actually.
So are you making the case that all these bad decisions in the private sector are based on treasury forecasts?
No, I'm saying that if you read through how people are betting on growth. It's primarily because they're fed all these numbers.
But that's what is it, so they're betting on Treasury's numbers. Is that what you're saying?
Partially they're betting on Treasury numbers, but also IMF numbers, also World Bank numbers, also everybody's Zimstats numbers. And that there's no independent guy who's coming out and actually saying that the real economy, this is what the real economy looks like.
So I'm incredulous. And I'm sorry, I want to push back. I do not believe that there's a guy running a business on the ground who's seeing actual sales every week. And there's a trajectory, right? Because, you know, if you've been in business for 10 years, you know what the numbers, you know, what your peaks were, what your troughs are, right? So you're looking into the future and you're saying what Treasury is saying is more important or is more instructive.
No, it's
than
confirmation.
my data.
It's confirmation bias. So your data might actually be showing growth over the last 5 years. That you've actually been growing at, call it 10%, 15%. And then IMF comes out and says, actually, the Zimbabwean economy.
But if your business is in decline, and you should be cutting costs and reducing your footprint,
No.
you say
your growth. Okay, no one bets on their personal growth because their personal growth could come from a number of factors. It could be your own strategy as a business, right? But whenever you see an expansion of capacity, it's purely based on GDP growth. It's a bet on growth in an economy. So when you look at all these retailers, when the minute they decide that, we're going to expand, they're not basing it on their numbers. So you have a retailer who was, operating in a particular way and their numbers were going up, but they decided to actually increase their network. The only reason why they increase their network is because they're betting on economic growth.
not because they see demand.
So I think
demand could be very peculiar to them.
So I think theoretically there's nothing wrong with basing your growth projection on GDP growth. In fact, I think it's more like standard, depending on maybe the long-term relationship between your growth and the GDP performance. So, you do your regression analysis, probably find that maybe you grow at effect of 1.2 times the GDP or 0.8 times the GDP. So for an analyst, when I'm projecting into the future, that tends to be the base. That's why we're then making a case that these guys who are projecting these numbers, which businesses use as the base for their own projections, they have to do a better job.
That's all we're saying.
But they've a long track record of failure. So if you're in business and you're making a decision about 2025, 2026, why would you base your decision making on institutions that have got their forecasts consistently wrong over the last 10 years?
So imagine,
because there's confirmation bias.
Yeah, and imagine
you need because remember when okay, so let's go back a little bit just to understand the thinking process. So the first thinking process is this: if it's your own growth and it has nothing to do with economic growth, then all you just do is you just increase your working hours, or you have an overnight shift, or you push harder. You just push harder, or you become more productive. You're not going to increase capacity because you're very clear on where the economy is going. But if the economy comes out, the central bank comes out, IMF comes out, World Bank comes out, Afrexim Bank come out, and they say Zimbabwe is going to grow. Now, there's a perverse incentive for you to buy into those numbers, because that's how you're going to get a salary increment and you're going to get your benefit increment.
But if you own the business?
I think if you own the business, that's how you will, from a banking perspective, if you wanted to borrow money from the bank, what's the line you're going to put?
Yeah, your growth, but you still have to pay back your credit, right?
No, because you know that, remember the survey we did, you make most of your money from currency manipulation. But the story that you must sell
is growth.
Remember that story, the growth story feeds on many people, on many people's ambitions, personal ambitions, which, that's where the problem is. Because if I want a salary increment, then I'm going to talk about growth.
If you are making a pitch to investors, so you want them to bring money into Zimbabwe, your starting point is, okay, this is where the world GDP is going to be, where sub-Saharan Africa is going to be, and this is where Zim is going to be. And that Zim then become the basis of your optimism or lack thereof, right? And look, I think if those numbers are closer to reality, there's no one who would really question your basis. So that's why we're saying that, look, because we trust, because theoretically it's good. That's how people do it in other economies or whatever. If you could get the numbers that are closer, look, we know it's a projection. So if you miss it by a point or 100 basis point, etc., it's understandable. But what's really not good is a situation where you can just plug the number out of thin air simply because you want to project a picture. or paint a picture that is totally different from.
And then revise the numbers 2-3 years
down the line,
revise the numbers.
and still not learn
but we've got
anything
this-
from how bad your projection is.
I love what Ranga is saying, right? We've got the benefit of 10 years of history of these forecasts and announcements and predictions, right?
But
So why trust Treasury? Why trust IMF?
Because
why
you need their projections to go to an investor. Because that's how your salary increment happens.
No, I mean,
That's how your twin cab happens.
no.
So a prudent guy, I think where the Shumba's argument is, a prudent guy would say, you know what, I've observed in the last 10 years that these guys are always missing their projection by a factor of maybe 30% or whatever. So if you get 5.6%, discount that by 30% and etc.
I mean, I
But how
can't
do I get
imagine.
my car?
I can't imagine.
Are you going to go to a bank manager and you're going to say, well, the government say the economy is going to grow at 6%, but we actually have done a study that whenever they say 6%, it's actually 1% growth.
Yeah.
And based on 1% growth, we want to increase capacity by 10%. Can you give us some money?
Nah, look.
So I guess it just shows the extent of
The former
complications.
And remember the bank
is shrinking, right?
Remember the bank is also making its assumptions based on the same number.
On the same number. Everyone is making.
So the bank is coming to you and it's saying, well, the economy is growing at 6%, but your volumes are actually growing at 2%. It means you're underperforming the economy.
Yeah.
So there's a perverse incentive to buy into, and confirmation bias, to buy into this government number, because that's how we all survive in this ecosystem. Whether you're looking for investors, you're looking for banking money, you're looking for credit terms, you're looking for anything.
Even salary increment.
Just an entire swamp of people are benefiting purely because of these numbers. So all we're actually saying is, that's why we're saying it's not purely because of government numbers. But we're saying that I think that government would help us a lot if those numbers were closer to reality. Then you could actually go to your bank manager and say, hey, Mr. Bank Manager, this is what it looks like, but we think that our strategy would outperform the GDP. Similarly with an investor, you can still find an investor, but it's a hard sell. You can't sell your company when the country is growing at 1% or even negative growth. It's just very difficult to sell. You can see what's happening in America. There's a flight to quality, right? Flight to liquidity, because they don't think that the economy is going to grow as much as was projected later on. Those are the realities. But anyway, ladies and gentlemen, let's hear your thoughts and views on this very interesting debate. I think let's continue having this debate, because maybe we're missing something. Maybe you know something that we don't. Let's hear your thoughts on it, and let's grow. And also, this is to the policymaker that the closer we are to what's actually happening on the ground, the better decision making right across the economy. Otherwise, have yourself a wonderful Friday and a wonderful weekend, and that's exactly what we're going to do, yeah.
For sure. Cheers.